I'm very glad today to be with Don Wilson, the founder and CEO of DRW on the podcast. Thanks for coming, Don.
Great to be here.
Thanks for joining for this special episode, which is part of our ongoing Canton Network series. You are one of the most influential figure in traditional finance, the founder and CEO of DRW, as I mentioned, a leading global trading firm with over 2,000 employees across all major financial hubs. DRW specialized in high frequency and quantitative trading across crypto, rates, commodities, and also invests in real estate, venture capital, and emerging markets. I recently had the chance to interview Yuval Ross, the CEO and co-founder of Digital Asset, the company behind the Canton Network, and he highly recommended that I speak with you. So thank you for accepting the invitation.
Great. Yeah. No, looking forward to it.
Before we deep dive into your interest in digital assets and more specifically Canton, can you please start by introducing yourself as well? How did you start at DRW in the first place?
Sure. So, going way back in time, I went to University of Chicago for undergraduate school, and when I graduated, I decided that I wanted to go and trade in the trading pits. Um, uh, there's nothing like building models and applying them and getting real-time feedback, as opposed to in academia, building models, writing papers, and then having a debate about it. Whether you're right or wrong in markets, you get real-time feedback, and that was super interesting to me. So in 1989, I started off in the Eurodollar option pit. I was backed with $100,000 of capital. And after a few years, I had made enough money to start DRW. So in 1992, I started DRW. It was basically me standing in the Eurodollar option trading pit, a few guys that I'd hired. I wrote all of our code, risk management software, option pricing models, all of that. And that's how it all began.
And I'm I can relate to the States because that's my date of birth. So that was 33 years ago. Did you ever thought it would be that big of a firm back then?
Yeah, I mean, to me, at the time, a large trading firm was a firm with, a massive trading firm was a firm with 500 people. And I thought, that would be pretty crazy if I could build something like that. So no, I didn't really think that we would be quite, quite this large.
And I guess looking at your 30 years plus of experience in traditional finance, um, how did you come up and being interested into digital assets in general? And I guess, have you seen similar type of revolution in finance?
Yeah, so first of all, I'm always interested in new ideas, and I hire people who are interested in new ideas, um, and so it was really, 2012. Some of the guys who worked for me were quite excited about Bitcoin, and we started having discussions about. Uh, you know, is Bitcoin interesting? If so, what's interesting about it? Is Bitcoin potentially digital gold? Is it the blockchain infrastructure that's interesting? And where we came away from it was one just maybe. I mean, very small chance, but very small probability that maybe the world agrees that Bitcoin is digital gold. Um, and so owning some Bitcoin probably makes sense. Um, um, but also this idea that you could move value without an intermediary was super interesting to me. And, um, My experience from being in the trading pit, interacting with markets, interacting with clearing firms, interacting with exchanges, is that traditional finance is quite clunky. Um, and intermediaries are necessary to facilitate all sorts of things, and it creates a lot of friction in the system. And so, the other question we asked was, wow, imagine if you could uh, reduce the need for intermediaries by being able to move value 24/7 instantaneously. Um, and so that idea was super interesting to us. So we basically did three things. We said, okay, well, we're in the business of providing liquidity, so let's create a subsidiary that provides liquidity in Bitcoin and other digital assets. And so that was Cumberland. Um, we we bought some Bitcoin because we figured, maybe small chance that Bitcoin becomes digital gold. Probably should own some. And then we also started a company called Digital Assets. Um, which you mentioned earlier. You interviewed Yuval. Yuval and Eric Serenicki came out of DRW as part of the creation of that company um, in 2014.
And what's the third one? What's the third initiative? It's buy Bitcoin, right?
Yeah. Buy Bitcoin, make markets in Bitcoin, and figure out if we could launch a company that would actually leverage blockchain technology to make the plumbing of financial markets more efficient.
Right. And before we go into digital asset and Canton Network, um, you mentioned Cumberland, and we know the Cumberland firm quite well because they partner with us on staking and potentially other products in the future. Um, when was that, and how do you see Cumberland moving forward? And I would love to have your view on DeFi and I guess the crypto world in general.
Yeah, so Cumberland, we also started in 2014. We didn't call it DRW because I think the broad consensus at the time was that um, anybody dealing with Bitcoin was doing it for illicit purposes. Uh, and so we decided to brand it separately. Um, and my partner, who often is responsible for naming companies, is a Grateful Dead fan. And so, uh, there's the song about the Cumberland mines. And so with the reference to mining and, you know, we, uh, we called it Cumberland. Um, the, and so Cumberland has become, I don't know, certainly one of the largest liquidity providers in crypto assets. Both providing liquidity for large trades, providing liquidity via an API that institutions connect to, providing liquidity on exchanges. Um, and across the derivative space, and then we also are quite active in options, both bilateral and uh, uh, exchange traded. So whole host of activities. Um, you asked about my perspective on DeFi. That I think that the stuff happening in the DeFi space is super interesting, and I see a lot of promise for um, the convergence of traditional finance and DeFi as uh, we figure out how to get the plumbing right.
Right. And do you see, if we stay on the DeFi topic, do you see any blockers for large institutions like DRW to interact with DeFi today?
Well, I you know um, we've been quite conservative in how we interact with it. Making sure that we're not interacting with pools that have tainted assets in them, et cetera, et cetera. But ultimately we figured out how to get comfortable with that. Obviously we're um, you know getting into the space in 2014. We're obviously a little bit more forward looking than some of our peers. Um, but I think that at this point, it's certainly possible to interact with the space, and now the big opportunity is to get traditional financial instruments enabled for interaction with DeFi ecosystems.
Right. Such as um, securities being tokenized and then being used into DeFi protocols, for example.
Correct. Exactly.
Right. And I guess related to that, the Genius Act has been signed by the president, I think, this week, and the Clarity Act is going to be being voted by the Senate. So I guess is the current environment in the U.S. and these acts that are being passed is changing the landscape for you to interact with DeFi in general and to invest more into the space?
Yeah, this is obviously, this administration has made it very clear that they want to be supportive of the crypto ecosystem. Before we had the SEC and Gary Gensler kind of doing regulation by enforcement, that really puts um, makes it very hard to do business. So yeah, this administration is much more supportive. These laws being passed are going to be uh, important parts of how we get clarity in into the whole ecosystem and how how you go about doing all these things. So I think it's super exciting.
And I agree. I'm myself right now in Paris, but moving to New York this year, as it seems that if you want to grow and build a great company in digital asset now in the world, it's happening in the US, either in Chicago or cities like New York.
Yeah.
So coming back on Canton, you've worked with Yuval Ross. He was working in your team closely, and then came the ideation of digital assets, which really evolved over the years. So can you potentially come back on this 2013, 2014 period, and how did it start at DRW?
Yeah, as I said, one of the things that we thought was super promising was this opportunity to leverage blockchain to facilitate traditional finance, to make kind of the plumbing of traditional finance more efficient. And 2014, I don't know, arguably that was too early to start working on that, because I think that y- you know at the time people were trying to get their heads around, you know, well, kind of all of it. Is this interesting? Why is it interesting? And, Bitcoin is a scam and, just a lot of noise. And of course, the regulatory environment was super unclear. Um, and so, the initial goal was, given, the objective was to interact with banks and exchanges, et cetera, was how do you leverage this technology to do that? Um, in a way that feels safe for highly regulated institutions. And so, the initial focus was on building a private permission chain that that had the right characteristics to facilitate the movement of traditional financial instruments. Now, my view was always that at some point you would want to have a public chain. Um, that, a public chain is, obviously a network is, the value of a network is proportional to, the square of the number of participants in the network. And so, public network is going to have a lot more participants. Therefore, the network's going to be a lot more useful. And so ultimately, my view was always that this needed to eventually become a public chain. Um, and, but a public chain that had the characteristics that traditional institutions would feel comfortable interacting with. And so that was kind of you know, the evolution of the project. Was initially, the Canton chain was a private permission chain, and then last summer, um, it became a public chain, and all of the network participants who were interacting with the chain started validating transactions and started earning Canton coin as a result of what they were doing on the network.
Yeah, and I remember Yuval mentioning to me that folks in general mention or conflict, anonymity with privacy in crypto. And privacy is of a different thing, where you don't see forcibly, you still have all the ability of using open networks with all the efficiency that it provides, with all these participants having more value than essentially siloed networks. But you don't forcibly see the trade of your counterparts, because if everything is public, that might pose a problems to many use cases, but more specifically to how traditional finance has been operating within all these years. Can you relate to that?
Yeah, so that's 100% right. When I say a chain that's suitable for traditional financial market participants to use, that's a key part of it, is having the right amount uh, of privacy. And so, obviously, if somebody owns a lot of specific stock, and if everybody in the world could see how much stock they own, let's say that they're below the reporting threshold, then, you know, nobody really needs to know. But um, let's imagine a world where everybody sees how much stock they have, and as soon as they start selling the stock, everybody sees that in real time. And obviously, there are going to be a bunch of algos that will kind of, start selling that stock in anticipation of further selling as soon as they see that wallet movement. And of course, we see that with Bitcoin today. There were some very large Bitcoin movements of some old coins a few days ago, and it caused the price to go from 122,000 to 117,000 as people saw the you know kind of positioned in anticipation of the selling. Um, Now, ultimately, the market absorbed it pretty well, but there was obviously slippage because of the transparency. Um, and so, that level of transparency is just unacceptable. And even when it comes to collateral movement, nobody wants to broadcast their collateral movement to the entire universe, because then you can reverse engineer the positions that you're carrying. Um, and so, a key.
Sorry, just to pause on that because it's super interesting. Would you argue that a part of the volatility of crypto could be linked as well, maybe not exclusively, to the fact that some of these very large trades are public?
Oh, for sure. I mean, it definitely creates additional volatility. It's not the thing that, causes Bitcoin to go from, you know, down 80% and up 500% in relatively short periods of time historically, but it definitely results in additional volatility and additional slippage in execution. Yeah. Yeah, having a chain where you can transact without, and you can maybe configure, for a given market, how you want the degree of transparency that you want to have. For instance, you could say, okay, every time a trade happens in this particular market that's on, uh, you know, a part of the Canton Network, we want to publish um, the price and we want to publish the quantity, but we don't want to disseminate who bought and who sold. Um, but maybe the two participants to the trade see that, and maybe also a regulator sees it, or maybe an exchange sees it. You can set it up however you want. Or you could have a different marketplace where you say, all we're going to do is publish a price. When something trades, we'll publish a price, no volume, no other information. You can configure it however you want. And um, that, of course, is what is necessary to facilitate traditional financial transactions. And the other feature that's very important is what's known as composability. And so you could have different markets for different assets set up across the Canton ecosystem with slightly different rules about transparency and privacy. But at the same time, you could do an atomic transaction between those two instruments across those two different markets without, giving away the privacy the kind of minimum level of privacy that you have. And so that combination of characteristics, privacy and composability, are essential. Now, if you look at Ethereum or Solana or any of these other L1s, all the movements on those chains are public, and for a lot of use cases, it doesn't matter. That's totally fine. Um, and of course, in the crypto ecosystem, people have gotten used to that. But um, uh, however, as I said, if you want to put traditional financial instruments on top of the chain, then um, you need to tweak that. Now, one of the things that the answer from the crypto community is often, okay, well, we'll use zero knowledge proofs. And if you use zero knowledge proofs, then you actually wind up with something different than privacy. You wind up with complete anonymity. And traditional financial market participants are very uncomfortable with anonymity because it's hard to make sure that you're compliant from a regulatory perspective, OFAC, et cetera, KYC. And so that's not a great solution. The other thing, of course, is we've seen a series of zero knowledge exploits, and when that happens, it's very hard to know how many tokens were minted. So it can be quite a risky route to go. We don't think that that's the right solution.
Right. Because you have to essentially, you have to trust the cryptographic proof that is given to you, considering the fact that you can't read the original information for compliance, regulatory purposes, for example. And you mentioned the use cases that absolutely need privacy. Can you come back to one of these use cases, and one use case, for example, that DRW intends to build on top of Canton?
Yeah, so one project that we're working on right now is how do you tokenize treasuries and use them for collateral and use them to facilitate liquidity, let's say over a weekend. Obviously, uh, being able to transform a fully paid for treasury into cash or into, let's say, USDC is beneficial to being able to trade crypto over weekends. Now, what's interesting is, of course, traditional finance is also moving to 24/7. Equity markets are moving to 24/5. The CME has said they're going to move some markets to 24/7. So you need to be able to move collateral and come up with liquidity over weekends when banks are closed. And um, so that's an example, um, of a project that we're working on. Now, there are two different ways of tokenizing things. So, one is you could take a broker-dealer, buy an asset, have the broker-dealer issue kind of an on-chain IOU, and then you can move that asset around. Now, the problem with that is that you're now incurring credit risk. If something happens to that broker-dealer, um, you know, there may be problems getting the underlying asset. We're working with the DTCC uh, to actually tokenize a treasury, and so we view that as kind of as native tokenization. You're not incurring any incremental credit risk by doing it. The DTCC then would use Canton as the books and records for that instrument, um, and so that you know that really has a ton of important advantages.
Right. And it counter as well. It seems some of the latest announcement from large fintechs about tokenizing the credits or derivative of that equity versus um, the asset itself on Kenton. Um, and I'm also conscious of time. We have 4 minutes. So I guess where do you see Kenton in the next 5 to 10 years? And yeah, how do you see the traditional financial system adopting the technology?
Yeah, I think that Canton has a real shot at becoming, one of the most important L1s. Um, y- you know, right now already there's about $4 trillion of assets that have been tokenized on top of Canton. Now, some of these assets are assets that don't move that much, like interests in private equity, um, but uh, compared to kind of when you talk about TVL on these different chains, that kind of dwarfs what's happening. On the other hand, that's a relatively small amount of assets compared to the total traditional assets available in the world. So I think there's a ton of room to run there, and once you get assets on the chain that are more frequently traded, then you can really see activity take off. So I think that there's a real chance that Canton becomes kind of the go-to network for collateral movement in traditional finance, as well as the trading of many different uh, traditional financial instruments. So I think it's super exciting.
Great. And I agree. That's why we are betting and investing and building and helping participant to build on Kenton. Maybe two very last questions, quick questions. First, it's a very global one. What excites you the most in the world today? It could be in finance, could be in crypto, or elsewhere.
Yeah, I mean, here we live in a very exciting times. This confluence of AI and the progress that's happening in AI is just remarkable. Um, and the stuff that's happening in finance and this opportunity to kind of retool the way that traditional finance works, open up all sorts of opportunities for more efficient forms of funding, more efficient forms of collateral usage. Um, I think that the convergence of all of this, these are super exciting times.
Couldn't agree more. And maybe very, very last question. As we are doing this series on Canton Network, trying to talk to different participants building on the network, do you have someone to advise that we should have as next guest on the podcast?
Yeah, I mean, I think it's worth talking to Matthew McDermott, who's the person at Goldman Sachs who's responsible for their digital asset initiatives. He just joined the board of digital asset as part of their financing round, and you know they're doing all sorts of they have all sorts of exciting plans for what they're doing on the Canton Network. So I think he would be a good person to talk to.
Right. And we know Matthew, so you won't have to do any introduction there. So thank you very much, Don, for your time, your precious time. It was I had a blast to talk to you.
Very good to talk to you.